What if I told you that modern banking, the system that moves trillions of dollars every day without physically transporting a single coin, was invented in a basement? Not in London, not in New York, in Amsterdam, over 400 years ago. Welcome to the Ledger Chronicle, where the vault of history unlocks the secrets of money and power. This is the story of the Amsterdamsche Wisselbank, the Bank of Amsterdam. The institution that proved money doesn't need to be metal. That created the first stable currency in modern history, and that survived Tulip Mania, foreign invasions, and financial panics for nearly 2 centuries before a secret loan to the Dutch East India Company destroyed it. Amsterdam in 1609 was chaos, magnificent, wealthy chaos. The Dutch had just won independence from Spain and were becoming the richest people on earth. Ships arrived daily from Asia loaded with spices, silk, and porcelain. The stock exchange was booming. Merchants were making fortunes. But there was a problem. Money itself was broken. Over 800 different types of coins circulated in the Dutch Republic. Spanish ducats, German thalers, French livres, English shillings. Every merchant had to know the value of hundreds of foreign coins, and it got worse. The coins were constantly being clipped, sweated, or debased. Someone would shave silver off the edges, or shake coins in a bag until silver dust accumulated, or melt them down and remix them with cheaper metals. If you accepted payment in coins, you had no idea what you were actually getting. A coin stamped as 1 florin might contain 90% silver, or 70%, or 50%. Every transaction required weighing, testing, and arguing. Commerce was drowning in mistrust. The Amsterdam City Council had a radical solution. On January 31st, 1609, they opened the Wisselbank in the basement of the City Hall, the Exchange Bank, and it changed money forever. Here's how it worked. Merchants deposited their coins and bullion at the bank. In exchange, they received a credit in their account measured in bank florins. Not physical coins, just numbers in a ledger. Those bank florins were guaranteed by the city of Amsterdam. They couldn't be clipped or debased. They were stable. And critically, you could transfer them to other account holders without ever touching a coin. You walk into the bank. Tell the clerk to debit your account and credit someone else's. Transaction complete. No metal. No weighing. No fraud. It sounds simple now, but in 1609, it was revolutionary. For the first time in history, money became information instead of metal. The bank charged a small fee for deposits, about 0.025%. It paid no interest. It didn't lend money. It just stored value and facilitated transfers. That was it. And merchants loved it. Within a decade, the Wisselbank held over 1 million florins in deposits. By the 1640s, that had grown to 8 million. Anyone doing serious business in Amsterdam had an account. The Dutch East India Company made all its payments through the bank. Stock traders settled transactions through the bank. International merchants used bank florins as the standard for contracts. And here's the remarkable part. Bank florins traded at a premium to physical coins. The same nominal amount was worth more as a bank balance than as metal in your pocket. This premium, called the agio, usually ranged between 3 and 5%. Why? Because bank money was better, safer, more convenient, more trusted. People preferred ledger entries guaranteed by the city to physical coins that might be fake. The bank actively managed this premium. When the agio rose too high, the bank would accept more deposits, increasing the supply of bank money. When it fell too low, the bank would tighten. It was conducting monetary policy, open market operations in 1609, centuries before anyone called it that. Other Dutch cities noticed. Middelburg opened an exchange bank in 1616, Delft in 1621, Rotterdam in 1635. The model spread. But Amsterdam's Wisselbank remained the most important, the most trusted, the most imitated. The bank's credibility was tested repeatedly. During the Tulip Mania of the 1630s, when bulb prices soared to insane levels and then collapsed, the Wisselbank kept functioning normally. During the disaster year of 1672, when France, England, Münster, and Cologne all invaded the Netherlands simultaneously and the government nearly fell, the bank paid out on demand, without hesitation. That stability was the point. The bank wasn't there to make profits. It was there to provide trust. And for over 150 years, it delivered. But then came the Fourth Anglo-Dutch War, and a secret that would destroy everything. The bank's charter explicitly forbade lending. It was supposed to keep 100% reserves, every florin in the ledger backed by metal in the vault. That's what made it trustworthy. But starting in the 1780s, the bank began making massive unsecured loans to the Dutch East India Company. The VOC was struggling, trade was declining, debts were mounting, and the bank, pressured by the city and the company's powerful directors, lent anyway. The loans were kept secret. The public still believed the bank held full reserves. But it didn't. By 1790, the bank had lent far more than it held. It was insolvent. And when the VOC finally collapsed, the truth came out. The premium on bank florins disappeared. Depositors tried to withdraw. The city of Amsterdam was forced to take control. In 1791, the bank suspended operations. It limped along for a few more years, but the trust was gone. By 1820, it was liquidated. The downfall teaches the same lesson every failed bank teaches. Credibility is everything. And once you lose it, you can't get it back. But the Wisselbank's legacy didn't die. The ideas it pioneered, ledger-based money, central clearing, monetary stability, deposit guarantees, became the foundation of modern central banking. The Bank of England, founded in 1694, studied the Wisselbank. So did every central bank that followed. The Federal Reserve, the European Central Bank. All of them descend from the institution created in a basement in Amsterdam in 1609. Even today's debates echo the Wisselbank story. Should central banks lend to failing companies? How much transparency do they owe the public? What happens when they sacrifice their credibility to support the government or powerful corporations? The questions are the same. Only the scale has changed. The Bank of Amsterdam proved that money doesn't need intrinsic value. It just needs trust. And it proved that institutions, even brilliant, well-designed institutions, can destroy themselves by betraying that trust. For 180 years, the Wisselbank was the safest place in the world to keep money. Then, it made secret loans to a failing monopoly. And within a decade, it was gone. The vault in Amsterdam's Old City Hall still exists. You can visit it. The entrance is marked with an image of Mercury, the Roman god of commerce, but the bank is long dead. And the lesson remains: trust takes centuries to build, and one bad decision to destroy. If this gave you a new perspective, hit subscribe. History has the answers, and I'll show you where to look.